At the New Jersey SBDC Network, our mission is simple: to help businesses grow and succeed. Our consulting, training, and information services make it easier for businesses to reach their potential. Whether you're currently in operation or just starting out, we have the right tools, resources, and expertise to help you succeed. Visit us online to get started on your path to success today.
Good afternoon, everyone. I hope everyone is doing well. If you can see my screen and hear my voice, can you please type yes in the chat box? It should be located on the right side of the screen, or it will appear as a pop-up screen. Yes. Okay, yes, Denise. Yes, Carlos. Yes, Piper. Yes, Sonia. Thank you so much. Thank you so much. Okay, so let's get started. We are expecting a few more attendees, but I'm sure they'll trickle in as we begin, okay? So a pleasant good afternoon to everyone. My name is Koa Bell. I am an event coordinator here at the NJSBDC for Rutgers-Newark. And on behalf of Dr. Tendai Ndoro, the regional director, I would like to welcome you all to our new tax changes for small businesses in 2021. Now, for those of you that are unfamiliar with the SBDC, it stands for Small Business Development Centers. And here at the New Jersey Small Business Development Centers at Rutgers-Newark, or at RN-SBDC, we serve as the premier provider of business training and technical assistance services to establish small businesses, as well as to startups and entrepreneurs. Now, we are one of 12 centers in the NJSBDC network, and we service those in Essex County. Our center is hosted by the Rutgers Business School and funded through a public-private partnership agreement between the Small Business Administration, Rutgers University, and the New Jersey Business Action Center. Our mission here is to help entrepreneurs as well as business owners start and grow sustainable, successful businesses through the delivery of one-on-one business consulting, training, and technical assistance programs. Now, these services are provided to you at no cost and are paid for by your tax dollars. If you or your business is located in Essex County, our website is www.rnsbdc.com, where you can request counseling. On the top right-hand corner of our site, there's a button labeled Request Counseling. So clicking on that button will lead you to fill out information, including the help you are seeking. And within 24 to 48 hours, a consultant will reach out to you for an assessment, okay? For those of you that are not in Essex County, our other website is www.njsbdc.com. And on this website, you can type in your county and it will refer you to your local SBDC office. And for the benefit of everyone attending today's webinar, the audio has been muted and we will be taking questions via the Q&A feature here on Zoom. We do have the chat feature on, but the Q&A feature will kind of help us to remain organized and have the questions and answers in one designated area. So please feel free to post your questions and we will do our best to respond during or at the end of the webinar. I also want to remind you or just let you know that a copy of the presentation slides along with a video recording of this webinar will be emailed to you within 48 to 72 hours, business hours, so that you can refer to this information long after the end of this webinar. So it is now my pleasure to introduce to you our presenter for today's presentation, Mary Baker. Mary is the CEO and owner of Baker Tax and Accounting Services, LLC, and is an SBDC consultant here at the NJSBDC at Rutgers-Newark in the areas of taxes, accounting, bookkeeping, and financial management. So now without further ado, I will turn today's presentation over to Mary.
Hello, good afternoon, everyone. How's everyone today? I think we are trying to share, right? We're sharing here the screen.
Yes, give me 1 second to pull it up.
Okay, there we go. Hi, everyone. Good afternoon, everyone. It is a pleasure to be here this afternoon. I want to thank each and every one of you for taking out from your busy time just to be with us this afternoon. I want to also thank SBDC for having me and presenting to you this afternoon. It is a pleasure and thank you so much. So today we are here to talk about the most interesting thing that is going on now, and that are the new tax changes. We have had a challenging year. It has been overwhelming for a lot of us business owners, small, mid-sized business owners, and large business owners. And so with that, there are some changes that have been made to help us to save our business during this time of crisis. So I am just going to go over some general ones that really has some type of impact on the small and mid-sized businesses and the large businesses. Some of them are changes because of the grants and loans that we have received from the government during the time of COVID. And so with this, we will start. My name is Mary Baker. I am the founder and CEO of Baker Tax and Accounting Services. I have been doing this and I'm kind of aging myself a little bit, so I'll just say over 40 years, but I know I only look like I'm 40 years old, right? Um, this is my passion. My passion has always been to educate small business owners, mom and pop shops in the community on how to get their finances in order. And so that when opportunity comes or when these PPP, EIDL comes along, we are ready and we are prepared for this. I work with profit and nonprofit organization, coaching them and making sure that when opportunities come along, they are prepared. So it is my honor to be with you here this evening. Okay. So today we will be talking about some of the changes that are new when filing your taxes for tax year 2020. We do have agenda here of some of the basic that we will be covering. We're going to talk about some of the general rules of the taxes for a business owner. We will talk about the QBI, income deductions. There are some new form. There's a new form that for 2020 that the IRS has changed that we need to use. There's new charitable contribution tax changes, especially our main topic this year was PPP, how to treat that. Deferred taxes, which something came under the Affordable Act as well. We are also going to talk about some net operating losses, which is great that they have put in here. Interest expense limitation and qualified business property that are refunds. So this will be great for all of you. Once you get finished, you can call your accountants or your tax preparer and say, hey, I need to get this additional refund. Also, we will talk about the credits that they implemented for 2020 tax filing for employee retention, paid sick leave, and paid family leave because of COVID. So we do have a lot to cover this afternoon. And if you have any questions, please put them in the chat. And I ask that we wait until the end and then I can answer all of the questions. And if I don't know the answers to some of the questions, I will get back to you, find out the correct answer, and get back to you on those. So thank you so much, and I am ready. So the first thing I want to cover about the tax changes for 2020 tax filing for business owners is that we still need to keep to the same general rules. If you are running a business, you are allowed to deduct the costs of running your business, carrying your business on, or the trade that you're in. So what that means, any costs that you incurred when you were running your business for 2020, that still stands. It is deductible. They have to be business expenses that are considered ordinary and necessary in your industry according to the IRS guidelines. By ordinary, it means that expenses is common and is accepted in whatever industry you're running your business in. And it is necessary for these expenses to keep your business running. So always keep in mind that whatever you're running a business, always make sure that the courses are ordinary and necessary to keep your business running, no matter what type of business it is. This rule still applies to all small businesses, regardless of their entity, so proprietorship, partnership, corporation, or S corporation. So always just keep in mind that the general rules when filing your taxes for 2020 still applies. Thank you. One of the things that I want to point out today, and a lot of people do not discuss this with you. I don't know if your accountants discuss this with you or not, but I thought it was so important to bring this up doing this webinar is because of the new deductions and refunds and tax credits that the IRS has implemented for 2020 tax filing because of COVID. You will be entitled to deductions, tax deductions, and tax refunds, or we call them tax credits. These two things are totally different. Okay, the deduction when they have a tax law and it says this is a tax deduction, that reduces your income that you will pay taxes on. That usually reduces the taxes you have to pay. So that's pretty much lowering your taxable income as a business owner. When they say credit, that means that that's a credit that will reduce the amount of taxes you pay. So think of it as this way: deduction reduces your income, credit reduces the taxes that you owe. But also remember that the tax credit cannot increase your tax refund. So say, for instance, you have a refund or you don't have a refund, but you do have a credit. That credit cannot be a tax refund for you. You will not receive the money for the tax credit. It only helps to reduce what you owe in taxes. So just always keep in mind that your deductions versus tax credit or refund are totally different, and they affect your taxes in different ways. Okay. So the first thing we are going to cover, and this is not new to the tax laws, if you are a business owner, you should have been familiar with this rule. And I thought it was just so important that you understand this because of all of the things and all of the changes that they're doing with COVID. Under the tax reform, originally, we were entitled to 20% deduction on our business income, right? Whether you were 1040, Schedule C, partnership, S corporation, or limited liability company. The QBI, right, is lesser. So that means QBI means that we get 20% of our business income tax-free, which is a great thing. I don't know if anyone ever explained this to you or broke this down to you. It's a great thing if you're a small business owner, depending on how much income you make. But this can mean you can have 20,000 to 100,000 of your business income untaxed, depending. It allows you to keep this earning tax free, and it also help you from not going into a higher tax bracket. So you definitely need to consider your QBI. Ask your tax preparer, ask your accountant, what is your QBI when you're filing your tax return? It is 20% tax free of your business income. So important that you remember this. The next one. So this year, the thing is, we have a new form. The IRS has introduced a new form. So if you are a business that hire contractors and doesn't have employees, or if you're paying someone over $600, I apologize, you would normally prepare a 1099 miscellaneous form. New this year, if you're paying a contractor, this form is still being used, the 1099 miscellaneous form, but it is to report miscellaneous income to others, such as rent or payment to attorney or payment to someone that provides some type of service, but not for a contractor who actually did work for you. For 2020, the IRS has introduced a new form, which is called the 1099 NEC. NEC represents non employee compensation, and this form is now used if you hired or are using independent contractors. You would indicate this income on this form. You would indicate the 1099 for other that you paid out other than independent contractors, but for non-employee compensation, you are to use effective 2020 NEC. This form will be used going forward for non-contractor payment. So you will continue to use this form. It is still required that you do send this form as you did with the 1099 miscellaneous before January 31st of 2020. So you can use both forms, but remember one form is for independent contractors, NEC, and then any other payments you send out will be for miscellaneous going forward. Next. New this tax season, which is great, and I thought this would be it's really, really important. Even though it affects you on your personal side, but it also affects you as a business owner, which I thought was very important. So normally charitable contributions you had to claim charitable contribution if you itemize your deductions on your tax return going starting for 2020. If you made a contribution of up to $300 to a charitable organization, nonprofit organization, you can write this off on your tax return, even if you do not itemize deductions. This will give you a $300 deduction, reducing your income, right? They also have made it, they changed the limit, also increased it. 60% of your charitable contribution, adjusted gross income, is limited on cash contribution, which is an increase from prior for 50%. Also, if you are a corporation, the taxable income limit has been increased for 2020 from 10% to 25% on cash charitable contribution, right? And the taxable income limit on contribution of food inventory has increased from 15% to 25%. And the reason why the government has increased these is because of the COVID situation. And I guess they feel that more of us have contributed to non-charitable organizations. So this is allowing us as business owners to give back and to get some write-offs for these charitable contributions. Always remember, one of the things I always say, and when I'm doing these audits and things like that, when you're doing a charitable contribution, make sure if you can to write a check out as opposed to giving cash, unless the organization is giving you a receipt. um, because I have known in some of the audits that I have done, and if their charitable contribution is being audited, the IRS wants to see the check made out in cash to whoever you contributed to. So just always remember that if you're doing charity, if you can, write out a check if you possibly can. If you are doing food donations, and you purchase the food from the supermarket, make sure that you always, okay, hold on a minute. I lost everybody here. And I'm sorry, I lost everyone. So just make sure that you definitely keep records of it, even if you're purchasing food. So take advantage of the charitable contribution. And I always feel as a business owner in the community, if we can afford to definitely give some type of contributions to it. Next slide, please. The next one, which is the fun one, which I think is great, it is awesome that the government has done for us as business owners, is the PPP. We call that the tax-free income. So now, if any of you have received the PPP payroll protection loan from your bank, right? You can, this debt has been forgiven depending, or will be forgiven depending. But the thing about this is this PPP income is not taxable income. That's the great thing. We will not have to pay taxes on the PPP, right? This is like tax-free income. And along in before, when they gave out the PPP in the beginning, they hadn't decided whether or not they will allow us to whatever expenses we used on the PPP, will those expenses will be tax deductible. But guess what? It has just been changed and it has been approved that whatever expenses that we used our PPP loan funding on are tax deductible, which is a great thing. So whatever payroll, operating costs, mortgage, rent, any of that that you use the PPP funding on, you can deduct those expenses. And you do not have to report the PPP on your tax refund, on your tax income taxes. That same applies for the EIDL. So if you receive any money from EIDL as well, you do not have to report that as income on your 2020 federal tax return. Just keep in mind, you want to keep records of everything. I hope each and every one of you are keeping a close record of what you spend your funding on, your PPP funding on. But you just want to make sure you have that. I hope you kept that in a separate account so that it's not documented as income, right? You want to keep your paperwork on that. You want to make sure if you ever get audited and they look at you received a large funds and they say, what was this for? You have proof that this was PPP money and EIDL. But the great thing about this, the expenses that you use, you can deduct that on your 2020 federal income taxes. So you want to just make sure you keep a record of that and know what you spend that money on. I also recommend that with that funding, PPP, you have a record, and I mean specific record on exactly what you use the funding on, just in case whoever you got the loan from or SBA comes back, you have proof that you use this money on your business and not for personal use. So the good thing is PPP is tax-free income. There is a second round out there that's going on now, and I hope each and every one of you apply for the second round because, as they said before, if for the first round, if it was $50,000 or less, it was totally forgiven. So definitely apply for the second round as well. and it's open now to apply for the second round. And you need to do that as soon as possible before the funding go away or before the banks close them down again or the government say, okay, that's it, that's the deadline, no more PPP funds are available. So just keep that in mind, and it's tax-free income. Thank you. Next. So the next thing that we are going to discuss is deferred taxes. I don't know how many of you or have anyone have done this. This is generally for businesses and companies who basically had employees, which is your employment taxes, your employer taxes. These were taxes that you usually deposit for employment taxes, income taxes withheld from paychecks from the employees, your share of your Social Security and Medicare FICA taxes that you would normally withheld from your employees' paychecks. But under the new rule, you can elect to defer the employer's share of Social Security taxes from March 27, 2020 through the end of December 31st, 2020. So what that means is that you can hold on to that money. You did not have to pay it in 2020. That was giving you more money to have on hand to keep your business running. You just have to keep a record of it. Even if you set it aside, you didn't have to, even if you didn't use it, but you just wanted to keep the money there just in case you needed it to keep your business running in 2020. Or if you used it, you can elect to defer paying those taxes. But just keep in mind that when the time is up, the government is going to require you to pay these taxes back. If you decided to defer your employer taxes, you could make the election. 50% of the deferred amount can be paid by the end of 2021, and the other 50% must be paid by the end of 2022. However, if you received a PPP loan, you must, and I mean must, stop deferral once the loan is forgiven. And so what that means is, say if you elected to defer your employer taxes, right? And you received a notice from your bank or financial institution that your loan is forgiving and you did not have to pay back the PPP loan, you are required to stop the deferral once you have received official notice that your PPP or part of your PPP was forgiven. So you just want to keep up with that and make sure you keep a record. I tell you, um, I can't say this enough that if you are doing this and you are deferring your taxes, you want to make sure that you have a record of how much you owe, because believe me, if it's not paid back in a timely manner, there will be interest on those that haven't been paid in a timely manner until some other new changes. IRS has some changes or some of those things has changed. So if you do need more operating money and you defer the taxes, this is the best thing you could do right now, okay, for 2020 if you have not paid your employer taxes. Okay, so the next thing, this is some good stuff here. And the reason why I say this is what we call refund. And so when I say refund, is that due to the laws that they changed in COVID, right? And Security Act, you as a business owner may be able to file an amended return for 2018 and 2019, right? And these net operating loss refund also applies to 2020 as well. As I said, this is a refund. This is not a credit. And so when we say refund is meaning that you can apply. So say for, let's just say for 2018, right? You owe the IRS money and you pay them um, whatever you owe them, right? You can go back and apply for amended return for net operating loss. If you if you suffered a net operating loss in 2018 or 2019, you can carry the loss back 5 years to offset all the taxable income in those years. And so what that means is your accountant or your tax preparer can go back and apply these losses within 5 years. It used to be 3 years. Normally, they have changed the law that you can go back to 5 years and request these losses. So if you are someone that normally owed back in those years and have paid the taxes back, my recommendation is ask your accountant or your tax preparer to look at your losses and take it back 5 years and see does it make sense for you to get a credit for any money that you have paid or get the refund of the money. The results of this is an immediate tax return refund. So the thing is, because of the COVID Act and the CARE Act, the IRS has set up specific procedures to expedite these refund claims. So instead of waiting weeks and weeks for these claims, the IRS has specifically set up procedures for net operating loss refund or amended refund. I would say if you owed in 18 or 19 to go back and have a look if you had some losses that you couldn't report or you couldn't claim because of the 3 year period. Definitely ask your accountant to go back and look at this and see if you are entitled to a refund of any funds or additional refund of any funds when you have this. So it is important to look at these. It is important to ask questions and see if you have this. So it was very important to go back and look at that. Okay. The next one that has came into play for the 2020 is interest income limitation, right? And so prior to the Tax Cut and Job Act, a business entity could generally deduct its business interest expense without restrictions. So that means if we had any business interest that we paid, there was no restriction on it or anything like that. But when the Tax Cut and Job Act beginning in 2018 came in play, we was limited on how much interest we can deduct, which was 30% of our adjusted taxable income. This is also considered a refund that you can go back and look at. So the net interest is the amount of interest you paid or accrued by your business during the year, less the amount of interest included in taxable income for the year. The CARES Act raised the limit from 30% of our adjusted taxable income to 50% for 2019 and 2020 tax year. So here we go again. We could go back and amend our 2019 tax return. If you only claim 30% in 2019, you can go back and claim the additional 20% of business income that you would normally write off, which would also require you to do an amended tax return. You can consult with your accounting on this and ask if they have any questions on this, or you can go back and look and see if they claim the 30%, you can now do 50%. Okay. You can also elect, if you like, to calculate the 50% limit for 2020, right? Based on your adjusted taxable income for 2019. So this could be a high deduction for businesses that can reduce your taxable income in 2020 because of the COVID-19 outbreak. So my recommendation is you go back to your accountant, or if you do your own taxes, look at this. You can now claim for 2019, 2020, 50% of the business interest expense as opposed to 30% for 2020. So please take advantage of this. The IRS has put specific procedures in place to address all of these amended returns that has been affected by um, COVID. It is so important that you look at this. And also, effective last year for 19, now the IRS allows us to send the amended returns electronically. So your accountant or your tax preparer will be able to do these amended returns and send them electronically, as opposed to previously you had to mail them out, which took longer period of time. So this, they would get it electronically, they'll get it sooner. Um, Hopefully they will be processing this quicker than they normally would do. The next refund that you can look at is your qualified business property. This is also considered a refund on your tax return amended. If you made certain improvements, or major improvements, I'll say, to the interior of your commercial space, say if you're a restaurant, a retail store, even if you're an office and you made major repairs, you can now definitely treat the courses as fully deductible in the first year using bonus depreciation in the year in which you place the property in service. As before, we normally would depreciate this over 39 years, over 39 years. Now you will be able to use the bonus depreciation and write off the cost in the year that the property was placed in service. This is great. I hope all of you, each and every one of you, are actually using the depreciation. And some of you, you may want to use the bonus depreciation. Some of you may want to stretch it out. But because of COVID and everything that's been going on, they are allowing you now to actually use the bonus, and you could write that off in the year that you actually um, did the service or the certain improvement. So if you own a restaurant, if you own a retail store, if you did any of that stuff last year, and of course a lot of us just was not open, and you spend these funding, you could take advantage of that depreciation now, which is great. But two, if you don't want to take it now and you feel that your income was lower last year because of COVID, and you think 2021 you may have higher income, you can also choose to wait it out and depreciate it over the 39 years as opposed to at one lump sum time, which is what you can decide to do. But as usual, the IRS has put in place specific procedures to make changes in this accounting method and to get your tax refund to you as soon as possible. So for these three changes, the net operating loss, the interest expense limitation, and the qualified business property, these are refunds that you can do amended returns on to get the refund of the money or to lower your tax obligation for the prior year. For year 18, for net operating loss, and 19 for interest, 19 and 20. You, even if you owe money in these years, and this will help reduce the money that you owe, that helps as well to apply, because now your obligation, your money that you owe the IRS will be less. Or even if you owe and you paid the IRS already, they will send you that refund back. So my recommendation is to really take fully advantage of this. And you will be getting these slides. So you can take these slides. You can ask your accountant, what about this? Use these slides to say, hey, does any of this apply to me? Can I go back and do any of these things? Will any of this help me when I'm filing my taxes? Can I go back and do amended return to, owe less obligation to the IRS? Please do take these slides, take the list, and just show it to your accountant and say, hey, do I qualify? Do I qualify? Please do not pass up on any of this. Because of COVID, we don't know if the tax laws is going to change next year for 2021. We do not know. So my suggestion is to take full benefit of these refunds and these amended returns, especially the net operating loss. That used to be 3 years. They moved it to 5 years. So go back and take full advantage of it, because your obligation to the IRS will be less. The next slide. So the next three things that we are going to go into is credit. These are tax credits. Remember, as we said before, these are credits that can be applied to your tax return. These are not like the refunds. Credits just help reduce the taxes that you owe. It's not like we previously discussed the refunds. These would just help to reduce your how much taxes that you owe. And so one of the big things that we had this year, which was very, very important, and because of COVID for 2020, is employee retention credit. And what this is, if a qualified small business that paid qualified wages, right, after March 12, 2020, and before January 1st, 2021, can take a 50% credit. This allows the amount up to $10,000 per employee, plus it includes the health insurance coverage. So even if the employee was not $10,000, but you had health insurance coverage and an amount up to $10,000. The credit is refundable, so it can be recouped even if it's more than the taxes you owe. What calls this a qualified small business is if your business is one where the business is partially or fully suspended because of COVID, or had gross receipts below 50% of the comparable quarter in 2019. And so this is what you need to do, which is great, is to compare your gross receipts. And this is also important for the second round of the PPP loan. You need to go back and look at each one of your gross receipts for your first quarter, your second quarter, your third quarter, and your fourth quarter in 2020. If you have accountant or bookkeeper, they should be able to give you this information. This is your gross receipt. This is not your net receipt. And you should compare. So if your gross receipts were below 50% than 2019, you are considered a qualified small business. The thing is, this credit is an offset to all employment taxes deposit and is figured on a quarterly basis. So starting with the second quarter of 2020, third and fourth, you need to look at those numbers. Also, you need to look at these numbers if you are applying for the second round of PPP. This is one of the questions that they ask, which one of these quarters that you had 25% according to the PPP. So it's very important. If your employment taxes are not significant enough to cover the credit, you can receive advance payment from the IRS. Now, if this credit is advance payment, you will have to complete Form 7200. You can have your accountant complete this form for you, and then the IRS can give you advance payment of this credit if you fall within this term. My recommendation is you should go back and consult with your accountant to see if you qualify for this employee retention credit. It is so important for COVID. This is for 2020. We do not know what the laws and changes will be for 2021. So the next one we have, which is another credit, is paid sick and family leave credit. This is a credit. And so with the paid sick and family leave credit, the small business, because of the Family First Corona Response Act, you provide paid sick leave to employees up to 80 hours. You can take a fully refundable tax credit to offset the required payment. Okay? So if you provide 80 hours, up to 80 hours of paid sick leave to your employees because of COVID. Also, the small business to pay 10 weeks of family leave related to COVID can also take a fully refundable tax credit, right? So if you pay the sick leave or the family leave because your employee could not attend work, because a lot of us had employees that have children, they could not basically they could not come to work, so you have to give them family sick leave and you pay them up to 10 weeks of that, you can qualify for this credit. This one is also a similar payment, advance payment from the IRS for the employee retention credit, and you would apply the same way. My notion to you, my question to you, if you apply for any of these credits, make sure that you have all of your records Pacific. If you have a payroll company, most payroll companies have this information, but for you specific reports because of COVID that they can supply to you. But if you do take this credit, make sure you have all of your documents, or how they say it, your ducks in a row. You need to have all your ducks in a row, because if they ever come back, the IRS ever comes back and audit you for this credit to see if you qualify, you need to make sure you can give them this information and it makes sense to you. It is so important that you do all of these things. So now, just to go back over some of the things that we discussed today, you want to make sure some of the tax changes for 2020. Always remember to stick to the same general rules that you have in the past. You still are a business and you still need to keep records the same. Actually, I say right now, you need to keep even more records more secure records and detailed records than you did before. We don't know if the IRS is going to come back and ask us for any of this stuff because of COVID, but you always want to be prepared. Also, take advantage of the QBI. Your accountant should be doing that. The 20% tax-free money. It's nothing new, but I thought it was very important that to include this if you didn't know about this. We also have the new tax form, 1099, and the new form 1099 NEC, non-employee compensation. You want to take a full benefit of your charitable contributions, even on your personal side. If you don't itemize deduction, you can write up $300 charitable contributions. So definitely bring that to your accountant's attention. Also, with the PPP, you always want to remember that that is tax-free income as well as the EIDL. You do not have to pay taxes on any of that money. And now the IRS has also put into law any expenses that we use with the PPP funding, we can write it off as expense on our taxes, our business taxes. You also want to look into the deferred taxes. Um, if you postpone your employer taxes, you have up to 2021 to pay 50% of that back, and then the additional 50% 2022. Also, look at your net operating losses, which is a refund. You can do amended return as your accountant. The interest expense limitation is 50% as opposed to 30%. You can go back to 2019. If you only did 30%, you can include the additional 20%. The qualified business property, which is another refund that you can actually look into and take the bonus depreciation. And I hope each and every one of you are depreciating all of your business equipment and things like that, because we tend to forget that those can help us in reducing our tax obligation. Remember the 3 credits because of COVID. You have the employee retention credit, the paid sick leave credit, and the paid family leave credit. Make sure you keep up with all of those. And remember, deduction versus refund and credit are totally different. The deduction chips away at your income and you pay less taxes. And the credit reduces the amount of taxes that you owe. So just keep those in place and remember all of that. And now it's been a pleasure, and I am open to answer any questions. So now my question to you, are you ready to file your taxes? This is so important. Thank you. And I'm open for questions.
Hi, Mary. We do have one question from Jewel.
Okay.
I received the SBA 1K emergency grant and an additional SBA EIDL loan on top of that. Is the SBA EIDL forgivable?
Yes, it is. So the EIDL was not a loan. The EIDL was sort of like a grant loan so that you don't have to pay that back. No, you don't have to pay the EIDL back. It was only $1,000. And any expenses, just the same as with the PPP, any expenses that you use with the EIDL, you can still write them off as a business expense on your tax return. Yes. Any other questions?
Any more questions? We do have more time, so feel free to ask your questions.
Yes, yes. I think someone Lola has a raised hand. Oh, Lola, right? I think Lola has a raised hand.
Yes, Lola. You can feel free to type your question in the chat, in the Q&A, or in the Q&A, whichever works for you. Or if you would like to turn on your mic, you can also ask your question that way as well.
In the chat.
Okay, so it seems like there's no more questions.
Okay. Lola doesn't have a question.
Okay, we have a question from Khadijah. It says, is there a way to find out more about state laws?
And hi, Khadija. So if there's about state laws in reference to what? Taxes or what are you referencing to? What laws about what? Taxes. So specifically, is it for like sales tax? Is it for okay, here we go. Is it about sales taxes or business taxes? What are we taxes in what in reference? You can go.
It seems like she answered. She said, I hired contractors in 2020, but
No,
did
that's
not pay.
Jewel. That's a different.
Oh, I'm sorry. It's the wrong question. Never mind. But Khadijah said taxes.
Okay. So, yes, it depends. You can always go. Oh, you have to unmute Khadijah, please.
Okay, give me 1 second, Khadijah.
Okay. Hi, Khadijah. How are you?
Hello, how are you?
Great, great.
Thank you very much for an amazing presentation and lots of good information that you don't know what you don't know, but you just have to attend one of these and you get all the nuggets.
Thank you.
So thank you for that. My main question, actually, I live in California, and my main question revolves around California state taxes. So in terms of like the changes that need to happen, that are happening like in the business, it looks like a little bit, I'm not quite sure if this is even relevant. So please, don't let me disturb you if this question is not relevant. But in California, so you have to file taxes. And if you are an LLC disregarded entity in terms of structure, because it's a single member LLC, you can normally, file taxes as if you are a sole proprietor or a pass-through income from an IRS perspective. But from a state perspective, looks like there are certain filings that need to happen anyway. And that's where I sort of am confused, because I don't know exactly like how, if you don't have any business income, like I had no business income last year, and I started my business when COVID hit. So good luck or bad luck. But so I never like filed those forms, but I paid my, franchise tax board fees to keep my LLC alive. So until last year, for example, there were some income, so now I have to file. So how is the state treats all these changes, and how would they handle that? And is that something you can answer, or you can point me to a right direction?
Sure. So each state has their own separate laws as far as the business filing is concerned. And so generally, if you filing for the federal, I would recommend to always file for the state.
Of course.
And so I know, like in the state of New Jersey, even if it's an S corp or corporation, even though we say you have a corporation or company and it doesn't make any money, you still have to file in some states a zero tax return.
I
It's just
see.
required. So each state has their own guidelines, and the place I think you would be best is to go to California website, the state of California website for their business, and see what are the requirements for LLC.
Okay.
For
Yeah, I
that
mean,
specific state. But if you generally, when you're filing, if you're LLC and you're sole proprietor and you're filing your federal tax return,
and state.
yeah, and state together is basically whatever you're filing for the federal is the same for the state. And who's ever preparing your return should be sending your federal and state return together with
Yes,
the
yes. And then
LLC.
even if you're a business, because you're a single member disregarded entity, it's as if it's your income,
Right.
your personal income. But no, I understand. Thank you very much. I just wanted to make sure that, because when you don't have any personal income, you don't need to file taxes.
Right.
But when you don't have any business income, I wanted to understand if it's, a requirement for all states to still file the form, or if it's not. Yeah, and that's what I have to find out, I guess, from the state of California.
Right. And I do know if it's an LLC, you have to check with your state. But I do know with the federal, if it's a corporation, whether it's an S Corp or C Corp, even if you do not have any income, you need to file a zero tax return.
Okay. Got it.
Mm-hmm.
Thank
So
you very much, Mary.
You're welcome. Thank you. I'm glad I was able to help you.
And thank you for unmuting me. It was hard to type all of that.
Sorry.
That's okay. Thank you. So the next person we have is Jewel. Hi, Jewel, how are you today? So you said you hired contractors in 2020, but did not pay any more than $100. Do I still need to complete? Now, this is the thing for me. It depends on how many you had and do you have proof. So if it was like one or two and you paid them $100 and you paid them by check, that check is proof that you paid them. But if it's just $100, the check could be your proof that this is the contractor. Always put on your check, if you're paying a contractor a small amount, $50, $75. I always say in that note section, that is so important to the IRS. So in that note section, you want to put contractor or what that person did for you. You could use that check. But I say if it's more than 100, some people say, well, it was less than $600. But if you had 20 people that you paid $300, you want to give them that form because you want to have some backup that you did pay that out, because you don't have any proof. Say like if you paid somebody cash, $100 cash, what is your proof that you paid that person $100 cash for whatever service they provided for you, right? And if you were to get audited and the IRS or the state asks you, okay, you wrote this off as $100, what is your proof? You paid them cash? Did you give them an invoice? Did you have them sign a contract? So if it's minimum, I always recommend that you at least pay them with a check, because that check would be your proof. That makes sense? Was that able to help you? Okay. So the next one is, I believe I have someone that said, please explain the difference between 1099 miscellaneous and 1099 NEC. So starting with tax year 2020, the IRS created a new form, which is 1099 NEC. So 1099 NEC is non-employee compensation. So that would be someone that you hire as a contractor to do work for you. Say if I hired a consultant or someone to do some bookkeeping for me and I pay them. I normally would pay them prior years on a 1099 miscellaneous, but because it is compensation for service they rendered to me, I will pay them on the 1099 NEC. Now, if you go back and look at the 1099 miscellaneous, it had several boxes. It had boxes for if you were a landlord and you receive rent from a government agency, or if you paid an attorney. The attorney didn't work, you were paying him to do service for the business, then you can give him that because he was not like your employee. He was more and he was not like a contractor, but you want to report that I paid this attorney $3,000 for business, for him attending court for me or something like that. So the difference is that going forward, you have to use non-employee compensation for anyone that is a contractor. And most of the time, I recommend a contractor usually have their own tax ID number. Most of them use social security numbers, but if they have their own tax ID number, they're definitely classified as a contractor. The next one is for Piper. Hi, Piper. You say, is there any bookkeeping software that you recommend? The goal is to stay organized, keeping detailed records. So the one thing that I do recommend, we in this office, we use QuickBooks. QuickBooks is really user friendly and it basically integrates with any software that you're using. You can send it over to your accountant. You can send it over to your bookkeeper. But the thing about QuickBooks now, they have it QuickBooks Online. You can also access QuickBooks on your cell phone. And the one thing I like about QuickBooks now for a sole proprietor, if you have a receipt, you can actually take a photo of that receipt in the QuickBook apps and it'll automatically upload it for you. So most of the time we have receipts, we lose them, they white out, the ink disappear. But if you have QuickBooks, you can take a picture of that receipt and put that on your phone. That is for any of us as small business owners. One of the best things you can do is always take a picture of a receipt. And even if you just store it on your phone, you have it. So that you don't lose it and you can categorize it where it should go. Okay. Okay, the next one. Thank you. That was helpful. All the payments were electronic with the memos section written out. Okay, great. So, Jewel, that is great. So if the payments were electronic and the memo section written out, that's great. That's your proof. You could always get a copy of the check front and back. As a business owner, what I do recommend, I think now the bank, I know my bank charged me like $5 a month to always send you copies of your canceled checks with your bank statement front and back. I tell you, it's worth the $5. And the reason why, because if you were to ever get audited by the IRS or the state, they always want to see a copy of the canceled check. And that way you already have it on your bank statement. But if you have to go back and ask the bank for that, they generally charge you $5 per check copy. So if you have that, Jewel, and the electronic payments and the memo section is written out, that is great. Okay. And okay, yep, I'll follow my bank to see if I can get records. Yes, and that, some banks now they charge us like $5 additional or $3 additional a month. Excuse me. That's worth it to do that, but it's worth having it because if the state or the federal ever they want to see a copy of the chancellor check of who you paid it to, so you'll always have that as a record. Okay, was that able to help? Okay. Is there any more questions that we may have?
Feel free to take advantage of this time to ask your questions, if you have any.
So if you have any, my recommendation, if you have any additional questions or you have any more personalized questions, you can always reach out to NJSBC at Rutgers, and we can always do a one-on-one consultation if you have anything specific that you need to address. The phone number is there for you to reach out, and then we can do one-on-one consultation as well.
Okay, so that seems like it's it. Thank you so much, Mary, for the information, for the presentation, and for your time today.
Thank you, and it was a pleasure. It was such a pleasure. Thank you.
So before we wrap up, I just want to redirect you all to the chat here. I'm going to post some information for our upcoming webinars. If you're interested, take a look. I also have the Eventbrite link and our website link. So if you want to also request counseling, you can also click on that link there. I also want to remind you all that you will be receiving a video replay as well as the presentation slides in 24 to 48 hours. So please be on the lookout for that. You'll be able to refer back to this information in the future. And after this webinar, in the browser, you will see a survey pop up. I would really appreciate it if you could just take a few minutes to complete that. It really will help us to adjust our presentations as well as give us some information on what kind of assistance you are needing. So if you have time to complete that, your feedback is much appreciated. Okay, and on that note, we will now end this webinar. I want to thank you all for taking the time out to attend and participate. Thank you so much for your questions as well. Thank you, Mary, again.
Thank you.
And we look forward to seeing you at our future webinars. Have a great day, everyone.